For this session, our topic will be your property, plant, and equipment. Just like any other asset that we have discussed, we will start first, of course, with your recognition of property, plant, and equipment. And then we go with your measurement of property, plant, and equipment, which includes your initial and your subsequent measurement. And lastly, we will talk about your presentation of property, plant, and equipment. So for this session, we try to cover recognition and initial measurement. Recognition and initial measurement. So we start now with property, plant, and equipment. So what is a property, plant, and equipment? A property, plant, and equipment is defined as a property that is held for use in the production or supply of goods or services, for rental to others, or for admin purposes. Take note, it must be held for use in the production or supply of goods or services, and it is held for rental to others. It is held for rental to others or for administrative purposes. But soon, when we go through property, plant, and equipment, and we reach your investment property, you will learn that there are items of property, plant, and equipment that is separated from PPE, and it will be placed as investment property just because they are held for rental to others. Just because they are held for rental to others. Okay, so for this rental to others, take note here, not all PPE held for rental to others are PPE. Some items, especially when we go to your investment property, are to be presented as investment property. So it is a PPE considered as investment property by virtue of PAS 40. So what is important in this particular definition is the phrase held for use. Next, it is expected to be used for more than one period. So expected, more than one period. So based on our definition, we have here your characteristics of property, plant, and equipment. The first characteristic is it is tangible. Why is it important for us to place here the characteristic of tangible? Because guys, if ever it is only used in operations and it is long-term, then we can say both tangible and intangible assets are items of property, plant, and equipment. So it's important for us to say that a property, plant, and equipment has the characteristic of tangible because it separates it it is considered a separator as to whether it is PPE or intangible asset. Because if that is intangible and used in operations and also long-term intangible assets, but if it's tangible, then it is property, plant, and equipment. Okay. Uh, you should know by now that in a property, plant, equipment, one characteristic is tangible and not ownership. Because so long as you can touch the property, even if you don't own it, so long as the benefits will accrue to you, it is still considered property, plant, and equipment. This is made true because of your new leases standard, IFRS 17. No, IFRS 16. IFRS 16. IFRS 16 leases provides that uh, you can recognize a right of use of asset already, whether or not the ownership will transfer to you. So long as the probable economic benefits will flow to the entity, then we can consider that item as a property, plant, and equipment. So right of use of asset. So dati kasi, yung all the PPE natin, saka lang tayo magre-recognize ng property, plant, and equipment by virtue of lease if in case the ownership will transfer to the lessee, uh, to the lessor at the end of our lease term. So saka lang magta-transfer doon sa umuupa pagka may transfer of ownership, and pwede na natin yan i-recognize as PPE. Doon lang. Past 17 yon. But now in PFRS 16, so long as you control the economic benefits out of that property because of the probable future cash flows or economic benefits out of that property, you can already measure it. Kasi natanggal na rin sa characteristic niya ngayon yung you have ownership. So tangible lang importante. Tangible lang. Next, it is used in operations. So when we say used in operations, there are three main operations. First is for the production or supply of goods and services. Next, it can be for rental. Next, it can be used for admin purposes. So what's an example of PPE used for admin purposes? So example, we have here a building. and that building is used primarily for your administration or nandun lahat ng employees mo. So admin purposes yon. Pag naman yung building, doon pinoproduce yung products mo, edi for production or supply yon. For rental, pinapaupa. But take note, for rental to others, ingat tayo dyan, hindi lahat ng property held for rental to others are considered property, plant, and equipment. Because again, later on as we go through, it can be presented as an investment property under PAS 40. Another characteristic is it must be long-term. It must be long-term. Why? It must not be only used for the current period. Kasi for current period lang siya, i-expense mo siya. You will not capitalize it. You will not capitalize it. Okay? So it must benefit the current and future periods. Also, the same reason why some items of your expenses can be capitalized because of these long-term characteristics. Soon, when we go to your subsequent measurement, you will learn that you have your subsequent expenditures. And the subsequent expenditures can only benefit this period or your future periods. So when we say it benefits future periods, then there is a future economic benefit. And therefore, we have here a long-term benefit, then we can capitalize it. But when we say long-term, normally, this pertains to the life and also the economic benefit. When we say economic benefit, how long can we make use of the property? What are the possible benefits that we can make use out of the property or we can get out of the property? So main characteristics now, tangible, use in operations, and long-term. Take note, ownership is not already a characteristic because of PFRS 16. Okay, so the main characteristic that we need to look is tangible, not ownership. So long as you can touch, PPE. If you cannot touch it, then intangible assets. Sir, question. Di ba meron namang certificates, blah, blah, na ini-issue for intangible property, edi you can touch it. You can touch the certificate itself. That presents ownership. However, you cannot touch the intangible asset itself. Parang ganun yung dating. So you should not equate tangible property to the presentation of an ownership. Okay, you will learn that in your IA2 when you go to your intangible assets. So these characteristics are based on the definition. Why? Because again, this definition is important in the recognition of property, plant, and equipment. I always tell you, before our old conceptual framework tells us that to recognize a property, plant, and equipment, it should first meet the definition, and then it is probable and measurable. So under PAS 16, PAS 16 is the standard which governs your property, plant, and equipment. We still have probable and measurable as your recognition criteria. So long as probable future economic benefits will flow to the entity and you can measure that, then you can recognize it. Of course, it must meet the definition of that particular item. So it must be tangible, it must be for the operations, and it must be long-term use. But now, in our current conceptual framework, especially with our current standards, yung mga current standards na natin, yung PFRSs, nagbago yung recognition nila. So what is the recognition now? It must be relevant and faithfully represented. Actually, papasok din sa faithfully represented yan at saka relevancy based on the definition. Okay, sa faithful representation, papasok doon yung measurement na rin natin. So halos pareho lang din sila, yun nga lang, nagbago na because of our new conceptual framework. Okay, so for recognizing property, plant, and equipment, we still follow our old standard, PAS 16, probable and measurable. But before we can say it is PPE really, it must meet the definition of a PPE, and the main characteristics of a property, plant, and equipment are present into that particular property. Okay, so we go forward now and we discuss your initial measurement. So what is the initial measurement of your property, plant, and equipment? So these are the three main items on your property, plant, and equipment. First, you have your purchase price. Next, you have your directly attributable cost. Next, you have your initial dismantling cost. Your purchase price is dependent on the mode of acquisition. Your purchase price is dependent based on the mode of acquisition. But take note on your purchase price, please do not include your refundable taxes, especially VAT. So if ever there is a purchase of a property with VAT, you remove the VAT value. Okay? So for purchase price again, it is based on the mode of acquisition, whether it is through cash or a deferred settlement, deferred payment, or it is through an accounts payable, issuance of shares, bonds, exchange, etc. We will discuss that as we go through. Next, we have your directly attributable costs. This directly attributable costs among your non-current assets or non-financial assets are the same. Non-financial assets. So what non-financial assets had we discussed before? We have one, that is your inventories. It is the lone non-financial asset that we have discussed in this particular subject. So before, we also discussed directly attributable costs for inventories. And what is the directly attributable cost for property, plant, and equipment? The directly attributable costs for property, plant, and equipment are the costs necessary for its present location and condition. Sir, what are these directly attributable costs? Later, when we go to your land building machinery, we will learn these different items of directly attributable costs. So mostly, students really memorize those items, but so long as you know the definition, that it is necessary for the present location and condition, then it is a directly attributable cost. Because if you will memorize everything, baka masobrahan na kayo, nagkadagulo-gulo na mamaya yung utak ninyo. So mas okay lang na alamin natin if that cost is necessary for that particular property. So for example, you have a machine. So that that machine can properly work, you need a cooling system. So is that cooling system necessary for the condition of that property? Yes. Kasi nga, without that cooling system, that property cannot work. Kasi nga sabi natin kanina, ang premise natin, that machine can only work with a cooling system. So you need a cooling system. So that attributable cost is necessary for the present location and condition of that asset. Next, we have your initial dismantling cost. So for initial dismantling cost, this is your initial estimate of cost to dismantle the asset. So what are these dismantling costs? So for example, you have here a machinery. Tapos yung machinery na yan talagang nakaset up siya doon sa building mo or doon sa lupa mo. And then, para matanggal yan, kailangan mo pang mag-incur ng cost. So yun yung dismantling. Yung cost para tanggalin yung property na nandun, dismantling cost. Take note, this initial dismantling cost, unlike your purchase price and directly attributable cost, whatever is the value normally, whatever is the face value of this purchase price and directly attributable cost is the cost of the property. But if ever we have initial dismantling cost, take note, this dismantling cost will be expense after the useful life of the asset. Okay. So initial dismantling cost, saka lang natin talaga magagamit yung initial dismantling cost na yan pagka tapos na yung useful life of the asset. Because normally, it is only associated on the retirement of the asset. So we dismantle the asset because it is already retired or the useful life of the asset is already used. So hindi na natin siya pwedeng gamitin. So kailangan natin siyang palitan. So bago mo siya papalitan, kailangan mong tanggalin yung property na yon. Ang tawag doon ay dismantling cost. This dismantling cost will be incurred in the future. Take note, it will only be expensed after the useful life. Therefore, this will be incurred in the future. Since this is incurred in the future, this is one main problem of my students. They only add these items based on the face value, but no. If that is an initial dismantling cost, take note, it will be incurred in the future. Since it is incurred in the future, you must get the present value. You must get the present value. Sir, paano yung entry namin sa initial dismantling cost? Okay lang po kami sa purchase price, okay lang kami sa directly attributable cost. Kasi normally ang entry mo dito sa purchase price at directly attributable cost, debit property, plant and equipment, credit cash. Kasi nga bayad agad yan. Pero itong initial dismantling cost kasi is a future expense. So it will be expense after the useful life of the asset due to the retirement of the asset. So it is really incurred in the future. So how do we measure it? At present value. So how do we record it, sir? You will record it as a debit to property, plant, and equipment, and you have a credit to your liability on future dismantling. Okay? So any journal entry relating to the dismantling, so long as you measure a liability. So liability siya, hindi cash. Purchase price, normally cash. Directly attributable cost, normally cash. Pero tong dismantling cost, pag ni-record ninyo yan, kailangan i-record nyo siya through a liability. So you debit a PPE, credit a liability on that dismantling cost. And how do we measure it? Present value. Another problem most students encounter with this initial dismantling cost is the subsequent measurement of your dismantling cost. Since you have measured it at present value, how should you subsequently measure it? Through amortized cost, right? Lahat naman ng tinuturo natin sa inyo na measured at present value should be amortized. So how do you treat the amortized cost? So the amortized cost is an addition to the liability, but not to the property. So in short, pagka meron kang subsequent measurement of the initial dismantling cost, ang entry mo ay debit interest expense, credit the liability on estimated dismantling or future dismantling costs. So nasundan, hindi natin idadagdag yan sa property, not to the property. Purely amortization. And how do we amortize? When we amortize, we debit it to expense. So we debit interest expense and we credit liability. But of course, for us, since we are in asset, we debit your asset, we credit interest income. Pero since liability naman to, i-debit mo yung interest expense credit liability. Ingat ha, initial dismantling cost, how do we measure it? At present value. At present value. And how do we subsequently measure the dismantling cost? It is considered as an addition to the liability. However, it is not included to the value of the property. So our entry is debit, interest expense, and credit liability. So what are the items for the measurement of our property? First, purchase price, but this depends on the mode of acquisition. And then we have your directly attributable cost, the cost necessary for the present location and condition of the asset. And then we have your dismantling cost, which should be measured at present value. Okay? So the purchase price we will discuss as we go through your modes of acquisition. Your directly attributable cost will be discussed as we go through your land building machinery. Okay? Clear na tayo sa initial dismantling cost ha. Tandaan yung tatlo, purchase price, directly attributable cost, and initial dismantling cost. We start now with your modes of acquisition of property, plant, and equipment. So the first mode of acquisition is your cash. So if you purchase a property, plant, and equipment at cash, whatever is the cash price, yun na siya. Whatever is the cash price, yun na siya. Normally, we say that the cash price is the cash price equivalent. Pero alam mo kasing binili mo siya sa cash, ba't ka pa take note na dapat CPE yan? Because cash price or cash itself is the cash price equivalent for cash. Kasi the rule on these three items, you should measure it at cash price equivalent. But since you are buying it through cash, the cash price equivalent is the cash. How about on account? On account. So if ever the cash price equivalent is given, use the cash price equivalent. Clear tayo dyan ha. Sa tatlong to, cash, on account, and long-term financing, it should be measured at cash price equivalent. Ngayon, sa on account, pag given yung cash price equivalent, edi wala nang problema. Kung ano yung cash price equivalent, yun na siya. Pero, kung walang cash price equivalent, if no cash price equivalent, how do we measure it? You should measure it net of discount, whether taken or not. Take note of this, net of discount, whether taken or not. So kahit man kinuha natin or hindi, i-record mo yung property, plant, and equipment net of discount. So for example, purchase property, plant, and equipment 3 million pesos on account. On account. If you will pay within 30 days, you will get 2% discount. If you will pay after 50 days, you don't have any discount. So yung 2% na yan, kukunin mo siya. I-record mo yan at property, plant, and equipment. So ang gagawin mo, PPE and credit accounts payable. The accounts payable should be measured at net. The accounts payable should be measured at net. So 3 million pesos times 98% will give us 2.94 million. Okay? 2.94 million. So, take note, pagka binili natin yung property, plant, and equipment, it should be measured at cash price equivalent. So, anong cash price equivalent sa on account? Eh di kung given, yun na siya. Pero kung wala, sir, ano yung cash price equivalent? It is the net of discount, whether taken or not. So in our example, we have here 2 over 30. That is the amount of the discount. So whether we will take or will not take that discount, we record the PPE net of that discount. Okay. Sir, what if it is with VAT? So sinabi dyan, 3 million inclusive of VAT. 3 million inclusive of VAT. Tapos on account siya, 230 and 50. 3 million inclusive of VAT, 230 and 50. Sabi ko kanina, di ba? Tanggalin ang refundable taxes. Ano yung refundable dito? Yung VAT. So out of the 3 million, dapat ang sagot mo dyan is the value, right? Value less the VAT, less the discount. Okay? So what is the value? 3 million pesos. The value is 3 million pesos. What is the VAT? Alam niyo na ba mag-compute ng VAT? So ang gagawin mo, 3 million divided by 112% times 12% para makuha mo yung VAT. So the VAT will be 3 million pesos divided by 1.12 times 0.12. So this will give us 321,428.57. Okay? We deduct the VAT. And you get the discount. Magkano yung discount natin? This is equal to 2% of 3 million. So what is the 2% of 3 million? We have 60,000. So yan siya. Okay? So what is the value now of our property? 2,618,571.43. Okay? Ayan na, value less VAT, less the discount. Yung discount, based lagi yan sa gross price. So, ibibase mo yan sa 3 million. Nasundan? Okay? Ganyan siya pagka on account. Net of discount, whether taken or not. How about if it's long-term financing? How do we measure it? Again, we measure it using your cash price equivalent. Sir, what if there is no cash price equivalent? If there's no cash price equivalent, how do we measure it? You measure it using the present value of cash payments. Present value of cash payments. So what is the present value of cash payments? Eddie, you use your PV of 1, PV of ordinary annuity of 1, PV of annuity due of 1. You just get the present value of cash payments. I don't have any problem now in your long-term financing because for sure, we learned already how to compute for these present value factors and how to compute for the present value of a particular item. Okay? So again, what are the rules as to these modes of acquisition? So 3 modes of acquisition to. Rule, cash price equivalent. If no cash price equivalent, on account, how do we measure? Net of discount, whether taken or not. Long-term financing, present value of cash payments. Another mode of acquisition, purchase at a basket price. So what is a purchase at a basket price? When we say it is purchase at a basket price, 2 or more property, plant, and equipment are purchased at a lump sum price. Okay, so for example, you purchase at 3 million pesos a land and a building. The land has the cost or carrying amount of 1 million, the building at 800,000. The fair value of the land is 3.5 million. The fair value of the building is 1.5 million pesos. Okay? So if it's purchased at basket price, if the fair value or all fair values are known, relative fair value. So all fair values are known. How do we get for the acquisition price? We use the relative fair value method. So we have here land, building. You get the fair value. What's the fair value of land? 3.5 million. Building, 1.5 million. Total, 5 million. So get the relative fair value. So what is the relative fair value? So 3.5 over 5 million. This one is 1.5 over 5 million. And you multiply it to the basket price. The basket price is the lump sum price. Ayan, 3 million. Yan yung ating lump sum price. So times 3 million. So magkano allocated kay land? 3.5 divided by 5 million times 3 million will give us 2.1 million. Kay building, 1.5 divided by 5 times 3 million, we have here 900,000 pesos. So how do we record that basket purchase? So we only have a lump sum price of 3 million pesos. We record it now. Land and building. So we have here 3.5 million and 1.5 million pesos. Okay? If all fair values are known, what if only some fair values are known? If only some fair values are known, you allocate first to those with known fair value. We call this one your residual method. So for example, we have here a basket price of 3 million. We have here a land with a carrying amount and a building with a carrying amount of 1 million and 800,000 respectively. And the fair value of the land is unknown, but the fair value of the building is known at 1 million. So first, you allocate it to the known fair value. So you debit building with the known fair value 1 million. Since we paid 3 million, whatever is the residual, that is for the land. So what is the residual? 3 million less 1 million, 2 million. Okay? So if ever it is purchased at the basket price, you look whether all fair values are known or only some fair values are known. So relative fair value and residual. Sir, pwede bang both not known? Bibihira na yun. Bibihira na yun. Okay? Purchase at the basket price. Another mode of acquisition, issuance of shares. This is quite easy because you just need to know the priority. So we have your fair value of the asset, fair value of shares, par value of shares. So what is this asset? Asset received, shares issued, and shares issued. Okay. So what is this issuance of share as a mode of acquisition? So shares of stocks are issued to purchase a property, plant, and equipment. Shares of stock are issued to purchase a property, plant, and equipment. So how do we measure it? Fair value of asset received, kung meron. Kung wala, fair value of shares issued. Kung wala pa rin, par value of shares issued. Okay? So where did we get this particular order of priority? Actually, it is based on your share-based compensation. Based on share-based compensation, PFRS 2, if ever you use shares to get something. So how do we measure it? Asset received, shares issued, and shares issued. Okay? So our mnemonics here for issuance of share is RII. RII. Okay? So ingat lang dito. Ano ba tong order of priority? Kung merong fair value of asset received, yan. Pag wala, edi ito na. Pag wala both, edi ito na. Ganun yung rule dyan. Okay? In order of priority. Another mode of acquisition of PPE is the issuance of bonds. So this one, a property, plant, and equipment is purchased through the issuance of bonds payable. So a property, plant, and equipment is purchased through the issuance of bonds payable. So generally, your entry here is debit PPE and you credit bonds payable. So what is the priority? First, fair value of bonds, and then fair value of asset received, and fair value of bonds or par value of or face value of bonds. So again, if this is given, yan na. Pag wala yan, edi yung fair value of asset received. Pag wala yung una at pangalawa, edi yung par value or face value of bonds. Sir, how do we compute for your fair value of bonds? Remember how to compute for the issue price of bonds? Do you still remember how to measure the issue price of bonds? Same lang yan. So it's either you compute the issue price of bonds using a present value or it is given. Okay? So to compute for the fair value of bonds, it is issue price of bonds based on the present value or it is given or it is given. So bibihira naman yung problems na issuance of bonds yung kanyang topic. Bibihira to. Ito ang normal na lumalabas. Exchange. So another mode of acquisition, we have your exchange. For this exchange, we have two companies or two entities which will now exchange their property, plant, and equipment. So in looking whether there is an exchange, we look if ever it is without commercial substance or with commercial substance. So for example, here, we have here A and B. A will exchange its property to B and B will exchange its property to A. Okay, so it is a reciprocal transaction. So we look whether it is without commercial substance or with commercial substance. So as we are seeing, if ever that is an exchange, we look whether the exchange is without commercial substance or with commercial substance. And when can we say that there is a commercial substance? So in case there is a difference as to the future economic benefits, particularly the cash flows on the future economic benefits on that property, then we can say there is a commercial substance. Sir, relating to a problem, when can we say it is commercial substance or it is with commercial substance or without commercial substance? The problem will always tell you whether the exchange lacks commercial substance or with commercial substance. So we start first with an exchange of property without commercial substance. But for theoretical purposes, remember this one. If ever there is a difference as to the future cash flows of the property, as to the future economic benefits, then we can say there is a commercial substance on that particular exchange. Now we go with your with commercial substance. So for your without commercial substance first. Without commercial substance, how do we measure it? To measure it, we measure it using the book value of asset given up. So whatever is the book value of asset given up, that is the amount of our property, plant, and equipment. So this is based on the carrying amount. How about if it is with commercial substance? If it is with commercial substance, particularly 1 and 2, fair value of asset given up and fair value of asset received. So we will measure our new property using fair value of asset given up or the fair value of asset received in order of priority. So in case we have your fair value of asset given up, yun yung uunahin natin. Pag wala yung fair value of asset given up, then we record it using fair value of asset received plus cash paid less cash received. So it is fair value of asset given up or fair value of asset received plus cash paid less cash received. Okay? So cash paid plus and less cash received. Sir, how about book value of asset given up? I don't know why some still place book value of asset given up as number 3. If there is a commercial substance, you will rarely see a book value of asset given up kasi ito papasok lang yan sa without commercial substance. But then, some still place here book value of asset given up. So you can still make use of book value of asset given up if ever 1 and 2 priority is not present. You can use priority number 3. Now since here, you will still measure it at the carrying amount of the asset. So parang you debit the new asset and you credit the old asset at the carrying amount. Therefore, there is no gain or loss. Okay? You debit the new asset at the carrying amount, old asset at the carrying amount, no gain or loss. But here, kasi with commercial substance, you will debit the new asset at the fair value, and you will credit the old asset at carrying amount. Therefore, there is a difference. The difference is known as your gain or loss on exchange. So when can we say there is a gain, and when can we say there is a loss? There is a gain on exchange if the fair value is greater than the carrying amount. Sir, what fair value? You go back to this rule, whether it is fair value of asset given up or fair value of asset received. And then, if the fair value is lesser than the carrying amount, we have a loss. Okay, we go back. If that is without commercial substance, there is no gain or loss because we will just debit the new asset and credit the old asset at the same amount, which is the carrying amount of the asset. But if that is with commercial substance, we need to debit the asset at fair value, either fair value of asset given up or fair value of asset received, depending on the priority. And then we will credit the old asset at the carrying amount. So the difference lies now as to the fair value and the carrying amount. If the fair value is greater than carrying amount, we have the gain. If the fair value is lesser than the carrying amount, we have a loss. Sir, should we not include it as part of computing your gain or loss the cash paid? Not anymore. Basta ang i-compare nyo lang talaga sa computation ng gain or loss, yung fair value, either asset given up or asset received to the carrying amount. No need na for your cash paid and cash received. Okay? Because as much as we want to make a one journal entry, mas maganda kasi pag nakita ninyo yung exchange lang muna plus the monetary amount. Okay. So for the exchange, you just debit the new asset, you credit the old asset, di ba? Tapos we have here either gain or we have a loss. For the monetary amount, if you paid, you credit cash, and then you debit the new asset. If you paid. If you receive, then you debit cash because you receive cash and you credit new asset. It would be easier for you to understand if it's like this. Because guys, some mistakes your exchange as an exchange with monetary value. Kasi itong monetary amount, iba uli yan. Another mode sana yan. It is exchange with monetary amount. Iba lang kasi pag purely exchange. Pag sinabi natin purely exchange, asset lang to asset. So kumbaga, machine 1 to machine 2 lang. Ganun lang yan. Kasi nga exchange. But if ever there is a monetary amount, it is an exchange with monetary amount. So if I were you, you record first the exchange, looking into the gain or loss, comparing the fair value to the carrying amount, and you record the monetary amount, which is paid or received. So if it's paid, it is an addition to the asset. If you receive a monetary amount, it is a decrease on the asset. I hope you are clear. Okay? So let's have an example on your exchange. So let's say the exchange is without commercial substance, on the books of X and the book of Y. Again, if that is without commercial substance, we will only debit the property at the carrying amount. So for X, what is the carrying amount of X? 300,000. Okay? So we debit new asset at 300,000. We credit the old asset at 300,000. For Y, what is the carrying amount? 200,000. So we debit new asset at 200,000, old asset at 200,000. Further, X has a cash payment. So what is our entry on the cash payment? Debit new asset and we credit cash, 20,000. Sir, new asset ba talaga? Actually, depending on the asset. So let's say machine to, edi machine new, ganun yun. Kailangan lang talaga natin siyang i-tag as either new or old. So dito, machine new, machine old. Pwedeng ganun. Pwede ring furniture new, furniture old. Okay? Basta kailangan nating i-tag yung new at saka old. And then Y, of course, if X paid, Y received. Tama? Y received. So kung naka-receive si Y, anong entry niya? Debit, cash, credit, new asset at 20,000. So the payment of X is a receipt to Y. Gets? And the payment of Y is the receipt of X. Ganun lang naman yon. Okay? Tandaan, cash paid is an addition. Cash receipt is a reduction. How about if it is with commercial substance? If that is a with commercial substance, we should measure at first fair value of asset given up, then fair value of asset received. Okay. So X, what is the fair value of the property of X? 450,000. The fair value is 450,000. So we debit the new asset at 450,000. Clear? And then we will receive the old. We will remove the old asset at the carrying amount of 300,000. We have a difference, right? The difference now is considered gain because the fair value is greater than the carrying amount, 150,000. And then to record the cash payment, ayan siya. Okay. How about for Y? For Y, what is the amount of the asset? First, fair value of asset given up. So what is the fair value of asset of Y? 375,000. So we will record the asset at 375,000. So new asset, 375,000. You remove the carrying amount of our old asset under Y, 200,000. We have a difference again, 175,000. Gain. Why? Because the fair value is greater than the carrying amount. And then to record the cash received, yan siya. So guys, how do we really interpret these types of problems? So if ever we have here X and we have here Y, we have here your carrying amount, and then we have your fair value of asset given up, fair value of asset received. Okay, so for X, what is the carrying amount? Carrying amount of X is 300,000. Fair value of asset given up is 450. Fair value of asset received. Whatever is the fair value of Y is the fair value of asset received for X. So 375 naman dyan. Ganun siya. So dito receive niya yan. Dito naman yan. Ganun siya. For Y, what is the carrying amount? 200,000. Fair value of asset given up, 375. Fair value of asset received, mare-receive niya yung property ni X. Anong fair value ng property ni X? 450. Ayan yung magkro-cross na siya. Okay? The fair value of asset given up of one entity is the fair value of asset received of one entity. Okay? The given up of one entity is the fair value of asset received of another entity. So here, look at it. We erase this different arrows para mas maintindihan nyo. Okay, so we have here X, the fair value of asset given up is 450. So the given up of one entity, 450. That is the fair value of asset received of another entity, 450. Okay? Gets? So ganun yung mangyayari. Yung given up ng isa, receive naman ng isa. So, ingat lang tayo sa pag-compute ng gain or loss on exchange, ano lang ang gagamitin? Yung fair value lang versus the carrying amount. Sir, what is the use of a cash payment? The cash payment increases. Whoever paid increases. Cash received decreases the value of the asset. Okay? So, tandaan to, kung ano yung payment ng isa, receipt naman ng isa. Kung ano yung payment ni Y, receipt naman ni X. Dito ang nagbayad, si X. So, makaka-receive si Y. Nasundan? Okay. Why is this important? Because sometimes problem asks you, what is the carrying amount of the new asset? So, ingat kayo sa cash payment at cash receipt. Okay? So, sir, what if wala yung fair value ni Y? wala yung fair value ni Y. So, let's say, wait. Wala yung fair value ni Y. Wala tong 375,000. Okay. Kung wala yung 375,000 ni Y, wala ding fair value of asset received si X. Nasundan? Wala ring fair value of asset given up si Y. Okay? So it's purely the 450,000 from X. So paano natin i-record yung kay Y? I-record naman na rin natin siya sa 450 kasi nga walang given up. So i-record natin siya sa 450. So in Y's books, what is our entry? So we have new asset at 450. We remove the carrying amount of the old asset at 200. So the difference of 250,000 is considered gain. Ganun naman yan, guys. In case walang fair value given kay property ni Y, so kung ano yung given up ni X na fair value, yun na yung fair value of asset received ni Y. So tandaan yung mga relationship for this particular exchange. The amount of given up of one entity is the amount of asset received on another entity. The amount of cash payment of one entity is the amount of cash receipt of another entity. Okay? Normal questions here. What is the amount of the new asset acquired through an exchange? And what is the amount of your gain or loss? So remember the treatment of your cash payments. Remember the treatment of your cash payments and your cash receipts. Okay? Another mode of acquisition of PPE is your trade-in. This is almost the same with exchange. But with trade-in, normally this is present with your small amount of assets. For example, cellphone, hindi ko alam kung applicable pa rin yung trade-in ng cellphone ngayon. Di ba? Pag trade-in, ibibigay mo yung property, tas may cash payment ka rin. So it's still the same effect, plus cash payment, less cash received. Plus cash payment, less cash received. Pero ang importante na dito, hindi na natin kukunin yung book value of asset given up. So, tinanggal na yung asset given up dito sa trade-in. Sir, what if there is no fair value of asset received? The fair value of asset received is also known as your cash price without trade-in. Tandaan niyo yan? Pag hindi nyo alam yung fair value of asset received, yun yung cash price without trade-in. Okay? Sir, how about the cash price with trade-in? Wag yun. Wag yun. Okay? Wag yun. So, sir, paano kung ang given lang is cash price with trade-in, tapos may cash price? Tapos may trade-in value. So, to get for the cash price without trade-in, you need to add the trade-in value. Okay? Kasi nga, ang fair value of asset received is cash price without trade-in. So, that is the total cash price equivalent, kumbaga. So, yung cash price equivalent mo, less the trade-in amount, eto pa yung babayaran mo, di ba? So, eto naman yung cash price with trade-in. Sundan? So, halimbawa, nag-trade ka ng cellphone mo. Kung ang value ng property talaga or ng cellphone is 50,000, tapos, pag trade in mo yung cellphone mo, ang babayaran mo na lang 35,000. So 50,000 dapat, pero nung nag-trade in ka, ang babayaran mo na lang 35. So anong ibig sabihin yan? Yung 15,000 is considered trade-in value. So pagka ang binigay is cash price with trade-in, which is 35,000, and the trade-in value, to get for the cash price without trade-in, you add the two items. Clear? Example natin. Cellphone, bibili ka, 50K yan. Pero kung ito-trade in mo yung cellphone mo ngayon, ang babayaran mo lang ng 35,000. So, ang 35,000 is a cash price with trade-in. So, yun yung babayaran mo pag nagbigay ka ng trade-in. So, magkano din ang trade-in value mo? Yun yung difference ng cash price without trade-in, which is 50,000, and with trade-in, 35,000. So, 15,000. So, paano, sir, pagka hindi given yung cash price without trade-in? Pag hindi given yung cash price without trade-in, to compute for it, it is cash price with trade-in plus trade-in value. Sir, lumalabas ba yan sa board exams ng financial accounting? Normally, hindi. Lumalabas ang trade-in sa advanced financial accounting. Advanced financial accounting reporting. But it is also proper for you to at least learn this already ahead of time. regarding trade-in value and no trade-in value. So when we say fair value of asset received, it is also known as your cash price without trade-in or your cash price equivalent. Another mode of acquisition of property, plant, and equipment. First, we have your donation under your unrelated donations, and we have your donations relating to stockholders or related donations. Okay? So again, donations should be grouped either as donation from unrelated parties or donation from your stockholder. So we start first from your donation from your stockholder. Remember your GRG, whenever there is an exchange, fair value of asset given up, fair value of asset received. In a donation, since this is unilateral, it is not a bilateral or reciprocal transfer. Kanina kasi reciprocal kaya alam natin yung given up at saka receive. This one is unilateral. Since it is unilateral, what we only know is what we receive. What we only know is what we receive. Therefore, ang natitira na lang dun sa GRG natin is the fair value of asset received. Fair value of asset received. So under fair value of asset received, we should measure our property using that fair value of asset received. So whether it is related or unrelated, fair value of asset received. Fair value, fair value. So donation, ang general rule, should be measured at fair value. Donation should be measured at fair value. So fair value of asset received. Mag-iiba na lang dun sa recording natin. For stockholder, you will credit it to donated capital. Donated capital is part of your additional paid-in capital or your share premium. Okay? If the donation came from stockholder, what is your entry? Debit PPE, credit, donated capital at its fair value. Donated capital is part of your additional paid-in capital. But if that is under government or unrelated parties, it is considered an income. It is considered an income. We start first with your from unrelated parties. If that is from unrelated parties, you consider it as an income. So we just debit PPE and you credit income from donation or just income. Ayan. At what amount? At fair value. How about if that is from government? So remember, if that is a government grant, what is the standard again for government grant? Government grant is governed by standard PS 20. PS 20, government grant. So under government grant, when do we measure it? When do we measure it? If ever we meet the conditions and it is received or receivable. So if we say it is a donation from government, what type of donation is this? Or what type of grant is this? This is a grant related to asset. Grant related to asset. I hope you still remember this one with your CFAS. So government grant, past 20. When do we recognize an income from grant? We will only recognize income from grant if we meet the conditions of the grant and it is already received or receivable. Okay, so what type of donation do we really have? It is considered a grant related to asset. So sabi nga dito, it is considered as income from government grant as long as the conditions are met. So ang entry mo dapat ay debit, property, plant, and equipment, credit, income from government grant. Okay? Income from government grant. So pwedeng ganyan yung entry mo. Okay? Debit PPE, credit income from government grant. But what if that particular donation is not really a donation of property, but only a subsidy on the purchase of your property? So for example, meron ka ng property, tapos nagbigay lang si government ng grant sa'yo. Anong treatment natin uli sa government grant na ganyan? We treat it as either a deferred income or a direct reduction to property, plant, and equipment. Di ba? It's either considered as a deferred income or a direct deduction to property, plant, and equipment. So for example, guys, I'll just erase this one. For example, you have here a property, plant, and equipment which is worth 20 million, and you have here a grant which is worth 2 million. So you have two modes to present that grant. It's either deferred income or a direct reduction to PPE. So if that is a direct reduction, how much is our PPE? 18 million. If the life of the PPE is 10 years, if the life of the PPE is 10 years, do we have any income? None, because it is direct reduction. But if that is considered a direct reduction, we have a depreciation. What is the depreciation? 18 million divided by 10, 1.8 million. But what if it is considered as a deferred income? How much should we measure the PPE? It's still at 20 million. Kasi nga, it is only a deferred income. So since it is deferred income, we defer it over the life of the property. So what is the life of the property? 10 years. So 2 million divided by 10, 200,000. And what is the depreciation? Since the property is initially 20 million, 20 million divided by 10 will give us 2 million. Okay? So what is the net effect? Is still both at 1.8 million. Okay, again, if that is a grant that is only a supplement to your property. So for example, you already expense something and then you are given a grant. How do we treat that grant related to asset? So it's either deferred income or a direct reduction to property, plant, and equipment. If that is a direct reduction, notice that the total grant is deducted to the value of the property, plant, and equipment. So, di ba pagka-receive natin nung grant, so let's say cash, kasi nga after na to nung property, plant, and equipment, tama? So, cash. And then, we credit your property, plant, and equipment instead of income from government grant. Direct reduction kasi siya. Okay? Paano naman pagka-deferred siya? Edi debit cash, credit deferred income from government grant. Tapos every year, we have an income from government grant, di ba? So ang gagawin mo, debit deferred income from government grant, credit grant income. Okay? So what is the difference of a donation purely from the government on the property? You just debit the PPE, you credit income from government grant. Kasi dinonate talaga sa yung property. Pero paano kung binigyan ka lang na certain amount out of that property like a subsidy? So you can treat it as a deferred income or a direct reduction to property, plant, and equipment. Pag deferred income, notice ang mangyayari pag deferred income. Ang PPE is still at 20 million. Ang income natin, i-defer natin over the life of the asset. What's the life of the asset? 10 years. So 2 million divided by 10, 200,000. And then our depreciation, we still record it, 20 million divided by 10, 2 million. But what if that is a direct reduction? If direct reduction, out of 20 million, we directly deduct the amount of the grant. So 20 million less 2 million, 18 million. And then, since we already recognize the grant directly, we will not recognize any income from the grant, zero. But the depreciation will decrease. It will be now 1.8 million because 20 million less 2 million is 18 million. 18 million divided by 10 years is 1.8 million. But either way, you will still have the same effect as to your net income. It is negative 1.8 million out of the property, whether or not it is a direct reduction or deferred. And still remember, I hope you still remember under past 20, we discussed whether the grant is to a depreciable asset or a non-depreciable asset. But we said on your non-depreciable asset, you treat it like a depreciable asset still because the condition on a non-depreciable asset is to put up a building. And a building is a depreciable asset. So babalik ka lang din ulit sa rule na whether it is deferred or a direct reduction. Okay, ulitin natin. If ever you have a donation general rule, you should measure it at the fair value of the asset received. Yung credit lang yung mag-iiba. Pagka stockholder, donated capital. Pag other unrelated parties, income from donation. Pag from grant or government, income from government grant. Okay? Pero meron din tayong income from government grant that is only like a subsidy but not really a donation of the whole property. So how do we treat that? That is considered a grant related to asset. Then we can either account for it as a deferred income or a direct reduction on our property, plant, and equipment. Next mode of acquisition of property, plant, and equipment, we have your self-construction. Self-construction. So under your self-construction, what we have here is we will construct a property, plant, and equipment on our own. And what do we call that property, plant, and equipment for construction? So if ever we have that type of property, we call it your qualifying asset, in which substantial period of time is needed to prepare that asset for use. And if ever that is a qualifying asset, take note, we can capitalize interest. What do we call a capitalizable interest again? The other term for this is avoidable interest. The other term for this is avoidable interest. So here, in your self-construction, how do we compute for the cost of our property, plant, and equipment? That is equal to your cost of construction plus capitalizable interest. Your cost of construction is, of course, direct material, direct labor, and your overhead. We do not have any problem with this because for sure you're done with that with your cost accounting. How about in your capitalizable interest? In capitalizing interest, we follow your borrowing costs. We follow your borrowing costs. And your borrowing cost is under PAS 23. And your borrowing cost is under PAS 23. So what are the items of your self-construction? Cost of the construction, which is your direct material, direct labor, and overhead, plus the capitalizable interest. So how do we compute for your capitalizable interest? We need first to determine when do we commence, when we suspend, and when we will cease the capitalization of interest. So first, we have your commencement of your capitalization. When do we commence? If the following items are met. First, you have already expenses on the construction, and you started construction. So those are the activities necessary to get the asset ready for its intended use are in progress. So meaning, you started construction. So here, it means that the construction must be in progress. And of course, you must incur interest. You must incur interest. Again, you should have started expending for the construction. Next, your construction must be in progress. And lastly, your interest cost must be already incurred or is being incurred. Sir, what if I have expenses already and I am in the progress of construction. However, I don't have any interest cost, then bawal. Kailangan kasi meron yung tatlo. Pag wala yung isa, no commencement of interest. Clear? Suspension. When do we suspend? Only during extended periods in which active development is interrupted. Take note on the word used by the standard. It must be extended periods. It must be extended periods. Because if ever it is only a brief interruption, if it is a brief interruption, it does not suspend. Okay? It does not suspend. So for example, you are constructing here in Cagayan Valley, and because of the floods, you cannot construct for 30 days. Is that brief or extended periods? Extended periods na yon. So you can suspend already. Okay? So it's a matter again of your professional judgment. But take note, if it is too brief, let's say 3 days, 4 days, 5 days, pwede naman na siguro yun. Pwede lang yun. Pero pagka umabot naman na ng 1 month, half a month, yun naman na yung extended yung period ng iyong development. And when do we cease? Of course, if it's complete. If it's complete. Okay. So when do we capitalize interest? If ever we have already expenses for the construction and the construction is in progress and we incur interest. When do we suspend? Only during extended periods of active development interruption. If that is only a brief interruption, you do not suspend. And when do we cease capitalization? When the construction is complete. When the construction is complete. Okay? So after knowing when to commence, when to suspend, and when to cease, let's now compute for your capitalizable interest. So how do we compute for your capitalizable interest? It depends on the type of borrowing. So the borrowing can either be a specific borrowing or a general borrowing. So what's the difference between a specific borrowing and a general borrowing? In a specific borrowing, you borrowed specifically or for the purpose of constructing that particular asset. So you borrowed for the purpose of construction. General borrowing, you just borrowed, but not minding the purpose of construction. Okay? Specific borrowing, borrow first for the construction. Borrow for the construction. So there is a direct relation. For general borrowing, you just have borrowings. You just have borrowings and you use that borrowing for construction. But take note for these borrowings, it is not specifically for construction. It is for all purpose. It is all purpose. So pwedeng gamitin kahit saan. So how do we compute for your capitalizable interest? Kasi 'di ba, ang pag-compute lang nga natin ay the cost of construction plus the capitalizable interest. Okay? So ang pag-compute nga natin is cost of construction plus capitalizable interest. So no problem with cost of construction. Dito tayo magkakaproblema. So how do we compute for your capitalizable interest? It is equal to your actual interest less income earned out of that specific borrowing. So that is your capitalizable interest. Sir, how do we compute for your actual interest? Guys, please, I know you already know how to compute for your interest, but please huwag kayo magmadali dito sa specific borrowing. To compute for your actual interest, it is equal to the face amount of the borrowing multiplied by your interest rate multiplied by the period. Sir, what is this period? Take note, guys. We have a certain period on the commencement until cessation. So once it is complete, mag-cease ka na. So for example, humiram ka ng January 1. Natapos siya ng July 31. So you can only capitalize from January 1 to July 31. Ang mali kasi ng mga estudyante, minumultiply na lang agad nila sa interest rate. No, do not forget to multiply it to your period. Kasi nga, na-discuss natin kanina, we start when the three items are present, we cease when it is complete. So you look at the time or starting point, you look at the time of the completion point. And that is your period. That is your period. Do not forget that. You multiplying it to the period for the actual interest. For the income earned, madali lang yan. It will always be given. That is the interest income earned out of reinvesting the money borrowed. Interest income earned out of reinvesting the money borrowed. How about in your general borrowing? So we have here your average expenditures multiplied by your general borrowing rate. That is your capitalizable interest. But I will again caution you here in this particular formula because this general borrowing rate or capitalizable interest should still follow the period of capitalization from commencement to cessation. So for example, again, you start on January, you finish on October 31, then only that period. So i-multiply mo yung average expenditures mo, i-multiply mo sa general borrowing rate, and the capitalizable interest. Sir, how do we compute for your average expenditures? For your average expenditures, it is equal to your expenditure multiplied by your months outstanding. Sir, how do we compute for your months outstanding? That is your total months of construction, the date over the total months of construction. So the date until the total month of construction. So if ever, January yan, until October 31, how many months? January, February, March, April, May, June, July, August, September, October. So 10 months yan. Total months of construction, 10. So 10 over 10. Ganun siya. Okay? Months outstanding, your period here until the end So you count. So January 1 until October 31. So date total divided by your total months outstanding. So total months of construction. So for the year, the maximum is 12, di ba? The max is 12, pero dito 10 kasi. So 10 yung nasa baba niya. Okay? So average expenditures, ganyan yung pag-compute. How about general borrowing rate? So we have here your total interest divided by your total fees amount. General borrowing rate, total interest divided by total fees amount. Okay? Again, what is the quotient in computing for capitalizable interest? Do not forget to multiply it to the proper period. Do not forget to multiply it to the proper period. Lagi kasi kayong 12 over 12. So pag natapos na yan ng June, July, August, i-count nyo yon. I-count nyo yon. Okay? Kasi nga, sabi natin, when do we start capitalization? If ever, expenses are already incurred, the construction is in progress, interest is incurred. When do we cease? If it's completed. So kung na-complete na siya before December 31, huwag nyo nang ipapilit na mag-12 months. Huwag nyo nang ipapilit mag-12 months. I-count nyo lang yung period. Okay? Ingat kayo dito sa period na to. Dito nagkakamali yung mga estudyante. No problem with average expenditures. Alam na ninyo yan. Saan ba ninyo na-discuss to? Na-discuss niya to sa partnership. Di ba? Yung pag-compute ng weighted average capital. Ganon. Same lang siya. Pero guys, ituturo ko na lang sa inyo yung months outstanding. Meron pang isang way months and change. Months and change. Pero mas weird yung pag-compute doon. Sa months outstanding na lang tayo para mas madali. Okay? So let's have an example. So for this one, we have a specific borrowing. AB company borrowed 3 million to finance its construction on a building on January 1, 2020. The loan carries an interest of 8%. Excess funds was invested during the year, which resulted to an income of 42,000. Okay? The building was completed on August 31, 2020, in which the company incurred 1.5 million for materials and 900,000 for labor and overhead. What is the capitalizable interest? Okay, so to compute for your capitalizable interest, we compute first for the actual interest. The actual interest is equal to your 3 million, the fees amount, multiplied by interest rate, multiplied by the period. The period is January 1 to August 31. January, February, March, April, May, June, July, August. 8 months. So times 8 over 12. So how much is our interest? 3 million times 8% times 8 over 12 will give us 160,000. Less the income earned out of reinvesting the funds, 42,000. So what is our capitalizable interest? 162,000 less 42,000, 118,000. By the way, capitalizable interest again is known as your avoidable interest. Sir, why is it known as avoidable interest? Because guys, interest is an expense, tama? Interest is an expense. Why is it called unavoidable? It is called avoidable because instead of expensing it, you place it as part of the cost of the asset. Okay? So instead of expensing it, you avoid an expense by placing it as a cost of the asset. So we're done with capitalizable interest. How about the value of the building? To compute for the value of the building, we have your cost of construction plus the capitalizable interest. So what are the costs of your construction? So we have here your 1.5 million for materials and 900,000 for labor and overhead. So this is 2.4 million, 1.5 million materials plus 900,000 labor and overhead. Plus the capitalizable interest of 118,000. So 2.4 million plus 118,000 will give us 2,518,000 pesos. So this is the cost of the building already. Okay, so if that is self-construction, what is the cost of the property, plant, and equipment? It is equal to the cost of construction plus any capitalizable interest. Another example for general borrowing. First, we need to compute first for our general borrowing rate. General borrowing rate is equal to your actual interest divided by your total fees amount. So actual interest to compute We have here 2 million multiplied by 12% plus 8 million multiplied by 15%. You divide it to the face amount, so 2 million plus 8 million. What is our general borrowing rate? So 2 million times 12% plus 8 million times 15% divided by 10 million. We have 14.4%. After that, we compute for your weighted average expenditures. For the first one, it is until December 31. Second one, October 31. So for the weighted average expenditures for December 31 and weighted average expenditures for 10/31. Okay. So how many months for 12/31? January 1 till 12/31, 12. So ang iyong denominator ay 12. Tama? And then for 10/31, how many months? 10 months. Tama? So 10. And then you count from the date of the incurrence until December 31. January to December, how many months? 12. March 31 to December, how many months? April, May, June, July, August, September, October, November, December, 9 months. Next, July 30 to December 31. July, August, so August 1, August, September, October, November, December, July, August, August, September, October, November, December. So we have 5 months. Next, October 1. So October, November, December, 3 months. Ayan. And then for 10/31, so count from the date up to the end. So January to 10/31, 10 months. March 31 to October 31. So April, May, June, July, September, October, 6 months. Next, we have July 30 to October 31. So August, September, October, 3 months. October 1 to October 31, 1 month. Okay? So we get now for our weighted average expenditures. So paano natin kukumputin yan? Yung expense divided, multiplied by their weight. Ganun yung gagawin natin. So 2.4 million times 12 over 12 plus 1.5 million times 9 over 12 plus 3 million times 5 over 12 plus 1 million times 3 over 12. So we have here 5,025,000 pesos. Okay. How about for 10/31? For 10/31, we have here 2.4 million times 10 over 10. And then 1.5 million times 6 over 10. And then we have 3 million times 3 over 10. And then we have 1 million times 10 times 1 over 10. So we have here 4.3 million pesos. Okay? So assumption 1, assumption 2. How to compute again for your general borrowing? Get first for the weighted average expenditures. And then you multiply it to your general borrowing rate. You multiply it to your period. Okay. So for assumption 1, building is completed December 31. So what is our weighted average expenditures? We have already computed that. 5,025,000. What is the general borrowing rate? 14.4%. What is the period? This is from January 1 to December 31. So 12 months. So 12 over 12. So 5,025,000 multiplied by 14.4 times 12 over 12 is 723,600. 723,600. How about for assumption 2? So for assumption 2, we have here our weighted average expenditures at 4.3 million. The general borrowing rate is 14.4%, and we multiply it to the period. So this is only from January 1 to October 31. So 10 months. So 10 over 12. So 4.3 million times 14.4% times 10 over 12 will give us 516,000 pesos. Okay? So after getting the amount of our capitalizable interest, then we can compute for the cost of the asset. So for the cost of the asset, so cost of construction plus capitalizable interest. Pa-total nga nitong cost of construction, 2.4 million plus 1.5 million plus 3 million plus 1 million will give us 7.9 million. Okay? So cost is 7.9 million. Next, we add capitalizable interest. Take note guys, for general borrowing, balik tayo dito, general borrowing. For capitalizable interest, it must not be greater than the actual interest. It must not be greater than the actual interest. Therefore, we must compute first for the actual interest. So what is the actual interest here? So 12% times 2 million plus 8% of, plus 15% of 8 million, we have 1,440,000. Tama ba? 1,440,000. So this is the actual interest. Is the capitalizable interest we have computed lower than the actual interest? Yes. So yan ang ating capitalizable interest. Okay? So compute na natin, 7.9 to 723,600. We have 8,623,600. So this is the cost of the building. Now, for assumption 2, what is the cost of the building? We have 7.9 million plus 516,000. We have 8,416,000 pesos. Sir, what if ang na-compute natin na capitalizable interest is 1.6 million? Okay. Assumption 3. Assumption 3, ang na-compute mong capitalizable interest ay 1.6 million. If that is 1.6 million, how do we compute then for your capitalizable interest? Sabi natin, your capitalizable interest must not be greater than the actual interest. So ang limit mo lang ay yung actual interest. So ang capitalizable interest, assuming assumption 3, 1.6 million. And what is the actual interest? 1.44 million. What is lower? 1.44 million. So yan ang dadagdag natin. Okay? In case lang guys, na may makompute kayong ganyan, do not forget to always compare your capitalizable interest na na-compute ninyo dun sa actual interest. Okay? Ang kukunin nyo lang talaga yung limit, which is your actual interest. Yung limit, which is the actual interest. Okay, another example. So here in our example, we have here a specific plus general borrowing. A specific plus general borrowing. So how about if we have a specific and general borrowing? The formula will be weighted average expenditure. Weighted average expenditure, you less the specific borrowing. This is attributable to general borrowing multiplied by general borrowing rate. This is the capitalizable interest general borrowing. You add the capitalizable interest for a specific borrowing. This is your total capitalizable interest. Okay. So, same lang halos, di ba? Nagdagdag lang ako dito ng amount ng specific. Pareho lang siya dun sa previous problem. Nagdagdag lang ako ng specific dito. So what is the weighted average expenditures? We have computed this a while back. We have 5,025,000. You deduct the specific borrowing. The specific borrowing here is 3 million. So this is attributable to general borrowing, 2,025,000 pesos. You multiply to your general borrowing rate. Since this is December 31, guys, since this is December 31, wala tayong problema. 14.4% period niya pa rin is 12 over 12. So how much is the capitalizable interest general borrowing? 2,025,000 times 14.4%, 291,600. And then for the specific borrowing, so capitalizable interest specific borrowing, so actual interest, we We have your 3 million times 8%. Since this is December 31, you multiply it to 12 over 12. So what is the actual interest? 3 million times 8% is 240,000. Okay. So what is the total capitalizable interest? So capitalizable interest is specific borrowing, 240. Capitalizable interest, general borrowing, 291,600. So total capitalizable interest, 240,000 plus 291,600. We have 531,600. 531,600. That's the total capitalizable interest. What's the value of the building? Value of the building, so the total cost. The total cost, 2.4 million. The expenditures, plus 1.5 million, plus 3 million, plus 1 million. We have 7.9 million. So this is 7.9 million. And then we add your capitalizable interest, which is 531,600. So what is the value of our building? 8,431,600. 8,431,600. Okay? So those are the different modes of acquisition from your cash purchase until your self-construction. Take note, for your self-construction, we have two types of interest, specific or general borrowing. On our third example, we have here now a mixture of specific and general. So how is our treatment? We get first for our weighted average expenditures, we deduct the specific borrowing. And then whatever is the remainder, that is the attributable amount to general borrowing. Then we multiply it to your general borrowing rate, multiply to the period, we have your capitalizable interest general borrowing. But for a specific borrowing, we still have the same formula. We have your actual interest less any income earned. However, in this example, we do not have any income earned. Therefore, we just get for the actual interest, which is 3 million times 8% times 12 over 12, 240,000. And then we combine the two amounts that we have computed, the general borrowing 291,600 and the specific borrowing 240,000. The total capitalizable interest is 531,600. And to compute for the value of the building, we have here your cost of 7.9 million plus the capitalizable interest, which is 531,600, 8,431,600. So therefore, guys, in your capitalization of interest, please do not forget on the commencement until the cessation. And please do not forget whether it is a specific borrowing or general borrowing or a mixture of both. And do not forget for the months or the period in which you will only capitalize interest. I already taught you how to compute for your months outstanding. Please do not forget whether it is a whole year or not a whole year. Okay? That's it for our modes of acquisition and for our acquisition of property, plant, and equipment, or introduction to property, plant, and equipment.